Hey guys, in this video we're going to be going over building confluences. Now, we've been learning step by step on what Forex Factory is, risk management, support and resistance, supply and demand, EMA areas, Fibonacci tools. Now we've got to apply all of that together in order for us to actually take a trade that we understand. Then second of all, that we not taking trades out of hope, but pure data and statistics based, which will inevitably put probability in our favor, okay? So in this video, we're going to be going over each step on how I build confluences, how you need to start building it too. Obviously, this goes a lot more in depth in our program, in our strategy section. Some of you guys won't have it. The guys that are in our group and our paid members will have it. So this is so important to understand, because if you don't do this, you're not going to get it right. So before I get into exactly building confluences, there's a couple of things that we need to go over, right? So we like to grade each idea. Grading basically meaning A plus. So let's write that out here. We've got A plus, we got A grade, we got B grade, and there sometimes can be a B plus as well, right? We've got B plus, B grade, and then just C grade. Okay, so there's 1, 2, 3, 4, 5. 5 different grading systems per trade idea. Now, an A plus setup looks like 5, right, or 6 confirmations or confluences, okay? An A grade setup can be 5 or 6. An A grade setup can look like 5 or 6, exactly like A plus, but has between 1 to 2 negative, let's say in there, for negative confluences, okay? Now, negative confluences meaning something that we've got to be cautious of in the markets, okay? Otherwise, when we take in our trade, we don't have the full understanding of it, or it could just be, for example, let's say I'm trying to buy the market, but overall the market has been bearish. We can classify that as a negative confluence. So we're going against flows. So it's not going to stop me from taking a trade, but it's something that I'm going to keep in mind of. It's like a red flag, a negative confluence in my idea. B plus is anywhere from 4 to 5, right? 4 to 5 confluences, 1 to 3 negative confluences. And that's what we usually see in a B plus setup, okay? B grade setups have between 3 to 4 confluences, and then also has 1 to 3 negative confluences, okay? Then C grade is a trade, I'm going to say no, okay? No, you should not be taking a C grade idea. This is where you got 1 or 2 confluences, there's so many red flags, and you're taking trades out of hope. And now most of you are actually sitting in this area. You don't fully understand the trade. You're trying to take it out of hope. You're trying to catch a quick move to make a little bit of money, to pass funded account, to get a withdrawal. And you end up taking more losses because you focused on what? The C grade ideas, than being patient for your higher grade ideas like B grade, B plus, A grade, A plus setups. Okay? This is very important to understand when grading ideas, because it's going to base off the type of risk that you're going to be applying and the type of entry model that you're going to be applying to these ideas, okay? So just to run it back, A plus has 5 to 6 confluences, but little to no negative confluences. A grade is 5 to 6, but 1 to 2 negative confluences. B plus is 4 to 5 confluences, but 1 to 3 negative confluences. Then B grade is 3 to 4 confluences, but 1 to 3 negative confluences. Then C grade is just, again, what is it? No. We shouldn't be taking C grade ideas because that's not what we are about, okay? It's a fail. You know, if you get a C, it's a fail. Now, once that we've understand this, okay, remember A grade 5 to 6, A plus 5 to 6, no negative confluences. It's important to understand that because then we can apply it to this idea that we're going to be developing now. So we got 5 different things that we look for, okay, and I'm going to go over each one. When I'm starting off my trade analysis idea, the first thing that I'm looking at is identifying flows. Okay, so clearly we can see that there's bearish momentum coming into play here. So overall movement, bearish. Cool. Now this is either going to be a negative or positive confluence in our favor when we're developing this idea. Okay, that's the first thing that I'm looking at. Overall flows are bearish. The next thing I want to look at is, are we breaking above overnight high or overnight low? Now this 10 to 1 only starts to happen once session starts. Okay, so we can clearly see we're only about 3 o'clock in the morning here. So let's wait for trade. Let's wait for the trade to develop a little bit further here. And boom, eventually we are out of overnight high. Okay, remember what I said, overall flows are what? Bearish. So in terms of the overnight high break above or below, ideally we want to follow that. So we got one negative confluence. The negative confluence, which would be that overall flows are bullish, a bearish, and we are looking for a bullish idea. Next thing I want to identify is, where's my previous day high and previous day low? Okay, so what we can check here is previous day highs all the way up at this level. Okay, we can mark that out. That's previous day high. And previous day low is all the way at this level. Now, these are four main value areas: overnight high, overnight low, previous day low, previous day high. Okay, so when I'm building out this idea, I want to identify those things. Then I want to find out where's my supply and demand. So here's our supply and demand area with EMA aligning. That would be the next one. So now we can clearly see that we got, if this idea does develop, we have one confluence, which would be overnight high break and a nice clean break. Two would be our supply and demand area forms within our value area. Okay. Three, EMA starting to align quite nicely. So we developed three confluences: supply and demand, EMA, overnight high crack. But the negative confluence that we see is previous day lows. Previous day flows are bearish. Okay, so we've got three confluences, but one negative confluence so far. Okay, let's see how price develops. Another confluence that we can take into account here is one, boom, bullish. We broke above a key level. We didn't exactly close above it, so it's still in the good or bad. So it's a negative and a positive at the same time, but we're getting great corrective structure pulling back into our level. Another confluence I can grab from this area is, I'm going to take my fib tool from the top to the bottom. I'm going to put it at that level. We want to see 61, boom, confluence number 4. It's either in the 61 area with our supply, with our demand, and our value. That value area is important, okay? And that is our fifth confluence. Value is overnight high. Supply and demand is the second one. EMA alignment is the third. Fibonacci tool is the fourth. Overnight high crack is the fifth. So now we're chilling in the range of A grade to B plus. Remember what I said. A grade to B plus. Okay, and usually A grade ideas and B plus ideas are the ones that we will tend to see more occasionally than an A plus setup. Okay, so one negative confluence here. We got good corrective structure running back into our level. Now, based on my risk, let's classify this not as an A grade. Let's go B plus, just based off the volume that's coming into our level. Remember, we've got to be cautious. So my risk that I'm going to be putting on is, obviously I'm going to be looking for an entry around about here. I'm going to look for a V2 entry. Reason for that is simply because I want to see, once price taps into my level, to break above overnight high again and then run into the 27 mark. Okay, so based off that, let's see how price develops. Okay, boom, we get the crack. Now stop loss is below that area. We are still holding EMA, which is great, and then running price eventually to our first TP, and then we can even run it to the 61 area. Let's see if price runs there. No, it doesn't. So that was the first TP, which essentially was a 1 to 4 risk reward, which is great, even on a V2 model. If we took a V3, ideally that we would look on the lower time frames, but essentially it would be 1 to 2. Less risk on the table, more room for management, and that's important. So the next thing that we can also take a look at, as we learned a little bit about Forex Factory, is we can go to the Forex Factory here, and we can see where is and what is happening on the 4th of March. Obviously, this is the 4th of March here that we're taking a trade. We can say, okay, cool, we're trading in the London session. We can see that there is no USD or GBP news except at 11:30, but it's low impact news, so it's not going to change the market crazy. but we have non-farm payroll at 315. Okay, so ideally, if this setup comes to play based off what the prediction is here, as we can see, obviously this is already the news outlet has been given. The forecast was 50, we got 63, so it was good news for the dollar, and that's why we saw GU drop, and I'll show you a bit now too. Okay, so I want to be out of this trade. I'm not going to be holding to TP3, for example. I'm going to be out of this trade by the 27. I want to grab my pips. I want to be out just based off that there is US news coming out. And if price is stalling too long and then US news comes out, I essentially by that time want to be minimizing my stops as best as possible. So now we're using all confidence. A good confidence about this news is that there's nothing major going on, so we don't expect massive volume or massive volatility coming in the market when we are entering this trade. That is a positive confluence too, which leads us into 6 confluences on the idea, which is great, but there was still 1 to 2 negative confluences in this trade idea. So it can be between A grade or B plus. Yeah. Now let's go over a C grade idea. Based off this would be very much a C grade idea. One confluence is what we're looking for is, we can clearly see bearish momentum is flowing down to the downside, right? Overnight high and low. Overnight low gets cracked and overnight high. That's 2 negative confluences already, right? Once it cracked overnight low, it pushed all the way back up. Still hovering below EMA though, but decent-ish. Third negative confluence. No key or precise supply and demand area. I mean, there's too many candles here. Price is mushy. We're not seeing great volume. It's really just consolidating within this area. Negative confluence number 4. Okay. Is there still an idea on this trade? Should I be taking it? No. Here we can see price pulls back into overnight low, right, which is value, but there's no supply and demand. It has EMA, so there's 2 confluences, but we found 4 negative confluences so far in this trade idea. Okay, this is based off a C grade idea. Nothing too convenient, nothing looking too great. I'm not going to be taking this idea, and as you can see exactly why. Let's see, even if I took a trade off the overnight low area, putting my stops below that level and trying to target at 1 to 3, can you see it literally hovers at this point and then starts to rotate, and we would have hit stop loss. That's the difference between an A plus, A grade, B plus, B grade idea compared to a C. So this is very much a C grade idea. We're not going to be taking these trades. So I hope you've learned something from this video. Make sure you are grading your ideas based on the grading system that we've put out. Building up your confluences. If you guys enjoyed, peace out.